Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to look at uranium. I got this information from Twitter, a lot of information from Twitter. I know a lot of people, they like to link information with the price move. They like a story. They like to basically give reasons. And what I'm going to say is, I think the reasons they might be necessarily wrong because the market conditions is what really drives everything. And what I mean by that is the increasing interest rate and inflationary environment is what's driving money into uranium. If you did not have that, it wouldn't be nearly as big. I mean, it would still rotate money. It would still rotate money because of the shortages, but the big move comes when big money moves. And that's when commodities, and we're seeing it across the entire commodity complex. This isn't just one sector. I'm just hoping that the money gets diverted to this sector because it's the largest squeeze potential. It's a very small sector. We're in an energy crisis, and this is kind of the last one, I think, to really take off. But let's get in there. I'll show you the information that I've got. So up here, we've got breaking news. European Parliament calls for an immediate EU embargo on uranium, nuclear fuel from Russia. Stronger action called for by Europe Parliament in strong resolution following war crimes in Ukraine. So they're trying to put an embargo on uranium nuclear. Looking at U.S. bipartisan House Resolution 7222 calling for a U.S. ban on the importation of uranium from Russia is continuing to gain support as 3 more co-sponsors add their name to the bill, including a Democrat from California. So they're trying to ban uranium from Russia, and I don't know, guys. I don't know if we can do this. Remember, uranium, we can't quickly ramp this stuff up. It's going to take years. So there's a large window of opportunity for squeezing to happen. This isn't like it's just a day or two. This is a big window. This is years. So it's interesting to see the development on these two things going through. Encore Energy, it says, to summarize, uranium today, the same price as 11 years ago, when market cap per pound of resources for uranium producers, for near producers, was 20% higher. Today, we have a carbon revolution, massive U3O8 production deficits, soaring electricity needs, and trade sanctions. Boom. Exactly. It's exactly what I'm seeing too. Coming over here, no one cares about what Germany does anymore. Korea just announced they will be life-extending 10 reactors that will add nearly 50 million pounds of new, unanticipated uranium demand over 10 years. Germany's 3 operating reactors no longer make much of any difference. Cheers. JP Morgan says, this is from Amir, he's the CEO of UEC, United Energy Corporation. JP Morgan says, be ready for 40% commodities rally to go far into record territory as investors boost their allocation to raw materials at a time of rising inflation. That's the rotation of money that I'm talking about. JP Morgan, Goldman Sachs, they're on it. It's almost as if the Federal Reserve, in increasing interest rates as fast as they are, is going to force this rotation, almost like they're saying, banks, get positioned over in commodities. We're going to raise this thing up and rotate the money all over. But that's what I think the reality is. I think that's what's going to happen, and that's where your money flow is coming from. It's coming from rising inflation and that increasing interest rate environment. Bloomberg, Europe's other energy problem, relying on Russian uranium nuclear fuel. It's a fact that an alternative supplier is needed. It's about to be a problem that's soon reality. I agree. It's going to be absolutely horrible. Prices are not going to stop, guys, at a low level. They are going to rocket. If people need the physical fuel and we don't have it, I don't know what that means necessarily for prices. It's going to be way higher. It says, what a day. 2022 will be unforgettable and, dare I say, generational for the uranium space. Looking at this, it says, one giant leap for uranium stocks for ETFs today. Just the beginning of this bull market unfolding in the uranium sector. We are now entering the beginning of the 3rd inning in what will be an amazing opportunity for early investors in this sector. Now, here's a chart. This is from John Hinster. It says, a chart is trying to tell me something big is about to happen. We've got the squeezing of this pennant and we're going to break to the upside, which we did. We just broke to the upside, and we're going to be heading towards the upper end of this channel. Big moves ahead of us. Quakes, again, it says U.S. nuclear fuel brokers, uranium markets, are reporting this morning that buyers of spot are now bidding at 62.25 at open today, pushing spot up another 13 cents with the ask, rising another $3 today to 194 per kilogram uranium. And that's even continuing to move higher than that because that was at 7 hours ago. Another one, investors were also buying the dip for Horizon's Global Uranium Index. That's the ETF HURA on the TSX yesterday, creating 75,000 new ETF units to all-time high of 2.555 million for AUM of 65.1 million of the market cap. Wow. We keep moving. So let me go back to the top here. I'm going to scoot over one more. Here we go. It says $100 trades uranium sooner than most investors think. We are at $63 now. UK will launch a new body called Great British Nuclear to bolster its nuclear capacity. Plans to approve up to 8 new reactors, one each year until 2030. Will triple nuclear from 8 gigawatts to 24 gigawatts. Will advance approval of 2 new Sizewell reactors. So we're getting reactors either extending their life or putting new reactors on all over the place. This is going to squeeze the physical uranium because we don't have new mines that are coming online very quickly. We've got uranium. There was a decade where nothing happened, and now months where decades are about to happen. $200 uranium is probable. Yep, I agree. Looks like the ATM machine for Sprott Physical Uranium Trust was running hot all day today, with over 4.6 million SPUT units traded in Canada. Should be a nice wad of cash brought in for more U308 stacking. Shazam, spot uranium has hit a beautiful brand spanking new 11-year high today, with U.S. nuclear fuel brokers uranium markets up another $1 to $63.50 a pound, and both Evo Markets and Numerico close behind at $63 a pound. In late February 2011, our uranium weekly comps table indicated producers to near-term producers were trading at an average enterprise value of about 12.25 per pound, a solid 78% better than the peer group today at US 687 a pound, indicative of where the uranium stocks could go. There's plenty left in the tank. And remember, this is 1225 at 145. It's going to be different as the prices move up, and depending on what the energy shortages are as well. One thing I wanted to share here, we've got the SPUT to gold ratio. A lot of people are starting to price things in terms of ratios against gold. I wonder who was the pioneer of that, because when I started doing it, everyone was asking me, what does uranium have to do with gold? And I said, well, gold is your measuring stick. Gold is the thing that you should be measuring your assets against. That is the indicator of how much money is in the system. And as gold takes off, uranium or SPUT and all these other assets should be taking off at a faster pace than gold. So gold is a measuring stick that moves, which accounts for the money in the system. And if you notice, SPUT versus gold on a monthly candlestick basis is breaking its downtrend line and rocketing higher. This is very bullish for a move to the upside. Let's move up here to the right-hand side as we keep moving. Final assays are due for fission drill holes at their on-land R840W zone, which defined a solid 15-story office tower of uranium with 9 floors of continuous, very high-grade U308. 52 holes drilled last year were best uranium results on the planet. And this is them trying to define that deposit. And they've got a very good deposit going on. The Triple R deposit is what it's called. But very high grade, very nice deposit. The natural gas market's delicate balance is crumbling. War, the energy transition, and surging demand will create a period of upheaval that tightens supply like never before. The LNG market could be short nearly 100 million tons per year by 2025. And the reason I've got LNG in here is because LNG, liquefied natural gas, or natural gas, is a generator of electricity. What this is going to do is, if we get short on natural gas, it's going to impact heating and electricity. We are going to have to run uranium longer. This is another form of demand for uranium when you have shortages in your competitor. And LNG demand is going to drastically outstrip supply as world shifts away from Russia. And Russia is a massive natural gas producer. The LNG production under construction, you can see all of this dark is the under construction. Demand post-Ukraine scenario, it's ramping higher. Russia production is this, the pinkish colored, and Russia under construction is the yellow. So that's the yellow and pink. It's a big chunk, and we're going to have this large deficit that's out in natural gas. Natural gas is one of my favorite investments, but uranium is going to be the next. Uranium is going to come, and they're going to focus their efforts on nuclear and say, hey, look, we need to ramp this up. How do we do it? And then everyone's going to say, well, we don't have the physical uranium. It's not there. And we got to produce so much more uranium than what we're producing today, that anything that's a near-term producer, I think will do pretty well. I also think all of the ones that are developers that are 3-4 years out will do very well. And I think we're going to see a scramble for countries to buy assets that are still in the ground. And this could be dangerous, because what I mean by dangerous, when people start to realize that natural gas and uranium and all these different high energy dense fuels, when they realize that there's a big shortage that's ahead of us, I think what's going to happen is they're going to start nationalizing stuff in some of these countries. Or they're going to start looking at things a little bit different, or they're going to tax the heck out of it. They're going to start doing things that we probably haven't seen before, because people are going to be struggling. They're going to be struggling for energy, and they're going to be struggling for food. They're going to be struggling for a whole bunch of different things, because energy is all of those things. Energy is food. Energy is life. Energy is the basis of the ability to do work and transform things into usable products. Energy is wealth. Energy is everything. And when people figure that out and they start looking at things maybe a little bit differently, they might be pricing things a little bit differently. We might start pricing things on a per unit of energy basis. What that means is that uranium is vastly underpriced if you were to look at it from a per energy unit basis. Because the units of energy that are gathered from uranium is astronomically high. It's one of the most energy dense sources. And to move up the wealth chain, so to speak, you have to move up your energy return on investment. You have to continually move to more energy dense sources. You can't really go backwards. Going backwards would be going to solar and wind. Going forward would be going to nuclear. And nuclear is going to be the bridge, but fission. Fission will be the bridge to fusion later. I don't think we're ready for fusion yet. I just don't think we're there. So we're going to probably see a lot of fission built between today and what fusion is in the future, if we can develop fusion. So I think uranium is in the sweet spot right now, and that's the one I think to grab. I also think natural gas and oil are also very good ones to grab, because we haven't moved off of those areas. And the supply chain difficulties that I see coming as well, and some of the shortages in the raw materials, that could also lock in or block out some of the renewables, block out some of the electric vehicles from being adopted as quickly as we could adopt them. So that could also hold true for those that are trying to build mines, is that they don't have the minerals to actually build the mine. So we're going to get into a very, I think, weird situation out in front. And someone had brought up in the comment section, maybe we should be buying these really near-term producers, or ones that are junior producers. That could be a very good bet. It could be, because they have pounds. They've got pounds in the ground that they can produce, and they have the infrastructure in place already. So that seems like a pretty good thing to do. And I think it was Peninsula Energy and URG Energy. URG is the ticker symbol. Those could be good bets. They really could. Because they can produce, and they'll net the difference between what we're paying for the dollars in the ground versus what they can sell in the open market in the future. So that is a very good plan to do that. It is. All right, guys, that's all I've got for today. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. Check out my website below. Become a Platinum member. We are holding a question and answer session tomorrow morning. I should say Saturday morning, 7 a.m. You can find that in the Platinum. If you're a Platinum member, there's a Zoom call. It has the information on how to get there. If that's interesting to you, we hold them on a weekly basis. And that's something that people might be interested in, to ask questions about whether it be uranium, oil, natural gas, the companies, what companies I like the best. I can even check out some of your guys' companies and look at the charts for you and get you my opinion. All right, guys, we'll catch you next time. This is Finding Value.